Hey there guys, welcome to this month's Technically Speaking. This is a new service that we've launched because many of you have been asking what are the processes that we use to help pick our trades. I've got Mitchell Laurential and of course Mr. Andrew Gibbs on the broadcast.
Pleasure to have you here, gentlemen. How are you?
Good, mate. Good.
Very good.
How are you?
Nice of you to invite us. Thanks very much.
No, not a problem. As creative director, we're always thinking of new ideas, and if we can touch on the results we've had and why, I think it would be really good content for our members to see what we're doing behind the scenes.
Well, it's by no means an accident. I mean, we've all been around the traps. We've seen what markets have got to offer, and obviously May has been an absolute ripper. There's no question about
Purple
that.
patch.
So, what I want to try and get out of this, and a lot of people sort of want to know what goes on behind the scenes. Obviously, most people that follow our training know I love fundamentals. A lot of people that are new and haven't spent a lot of time with Andrew, without stealing his thunder, I'd say is the god of technical analysis. Tell us about it, buddy.
Well, I mean, I also love fundamentals, don't get me wrong, but with technicals, it's a much faster way of analysing the market. You can go through a lot more stocks a lot more quickly and arrive at a decision. So, for instance, with our signal screener, we've had this yellow box since about the 24th of March, which means we've been bullish since then, and a lot of the pundits are only starting to get bullish now. They're looking at a 200-day moving average, and that, of course, is 3 months behind what's actually going on in the markets.
When you think about them, the recovery in the market the last 3 months has been somewhat of 35%. If you're calling a bull market now, you've missed out on 35% gains in that time.
I think that also, it's a valid point, isn't it? And like we all love different aspects of analysis. We have a favour towards one or other, but in these conditions, technical analysis has been absolutely critically important. And I mean, you've been around markets pretty much as long as I have, so there's a couple of decades, and this is not your first rodeo any more than it's mine. And people just look at it as a yellow box. What does that mean? But there's a huge amount of work that you've done to develop the robustness of that signal screener, and it's paid off in spades.
Yes, yeah. Well, it looks at volatility, and volatility trends a lot smoother than the actual market. So you get really clear signals and you get less false signals than just looking at the market itself. And the other thing it does is it looks at implied volatility. And by its very nature, implied volatility actually includes things like sentiment in its estimate.
Yeah, that's a cracker. So IV, I mean, it's been a payday, a unique part of their education when it comes to particularly trading options. But I think, in my experience, IV is probably one of the best forward-looking indicators. No one can see what comes on this side of the chart, but IV has just got that uncanny ability to give you a very clear indication of what's coming down the line.
It does. And if you look back on the 24th of March, IV actually changed direction a few days before the market changed, which is why in this situation, we actually got a really early signal of when the market turned bullish, which it doesn't happen every time. But in this case, it was a bit lucky. We almost called the lows. So
You'd rather be lucky than good, right? And
better to be lucky than smart, as the saying goes.
Yeah, exactly. And this is something that we give to our members every single morning at 9 o'clock. We have our signal screener daily market update. So our members have always got the benefit of this. It's your software, but I mean, we love to share the love, right?
That's right.
It's whatever you've got to throw at this to make good decisions, and that's certainly what we've been able to do. So, obviously, we talked at the top of the broadcast. May's been a ripper.
It's been a ripper. A purple patch as justified by the purple tie here, Mr. Gibbs.
It's the all black incarnate, but that tie is just,
I borrowed it from one of the other staff.
Yeah, look,
Linked it to me.
It's definitely borrowed, that one. It's on borrowed time, I reckon. I don't know about anything else. So tell us a bit. I mean, you guys have been pretty hectic, and obviously most people know who I am, and my face is on the front end of the business, but that's just one part of a very big, dynamic and very, very experienced team. So you guys head up the trading and investing decision silo. Tell us a bit, this is your time to do a lap of honor, I suppose. I mean, how many trades did we get out last month?
We got 31 trades out.
31 recommendations.
31 recommendations. That includes our options that didn't expire in the money, so reselling, but 31 videos as such with advice on what to do. Now, out of those 31, none of them, zero, zilch, was stopped out or exited out because of a price fall. It just didn't happen, and that was justified by our signal screener.
So 31 correct trades out of 31.
31 out of 31.
Well done, guys. It's a lap of honour for sure there.
Thank you.
And what sort of returns? I mean, everyone's looking at this going, all right, what sort of market's up? Anyone can make money. That's not true. Everyone reckons they can make money, but talk is cheap, but money buys the whiskey.
I love that saying. So out of the 31 trades, 24 of them expired in the money.
What does that mean? Because we've got people on this now that don't understand some of the language of options.
Okay, so when an option expires in the money, that essentially means is we know that you're getting maximum profit achieved. So your bat and ball's gone home and you're happy because you've got exactly what you came for. So out of that 31, 24 of those had a maximum profit. The other 7 are still active. So
And still in profit too.
and are still in profit. So if you just take last week as a proxy, our maximum profit average return was around about 3.7%.
So the average profit per trade, how many trades was that last week? It was about 9 or 10 trades?
About 9 or 10 trades last week.
And the average profit bank was
3.7. That's just on the maximum profits achieved. We still have some trades that are running with options returned from them.
okay, which is a cracking return. I mean, if you think about that, like what can you get at the bank now? 0.25% a year, and you pull down 3.7% in a week.
Sure.
A lot of people are looking for big returns, but those big returns are very inconsistent and irregular. This is something, very, very consistently over the last few months now we've been helping people pull down, which is great trading.
It's a great result, but remember we did have very favourable market conditions for that particular strategy. And as you can see, I mean, we've actually been in a bit of a bull market for the last few months. So,
that's interesting, isn't it, right?
Is it going to change? What do we do when it changes? Are we going to get another 31 winning trades in the next month? Or will market conditions change and become less favourable to the strategy? And how do we play it?
Well,
that's what we've got to look at.
Let's peel it back. I mean, for a lot of people, they've seen the economy is slowing down, and we talked about this in a money and investing podcast recently. They've seen the economy slow down. Unemployment is going up, but this stock market has just been racing. Hey,
it's crazy. I mean, so many people are saying the economy's in a dire situation, unemployment's through the roof, jobless claims, etc. But the stock market, on the other hand, is having a ripper.
But what happened after the Spanish flu? I know we're going back 100 years.
Before my time.
Not just
But do you know what? We had the roaring 20s straight after the Spanish flu. The market went straight up. You had, and in this case, we've got fiscal expansion, we've got monetary expansion. I mean, all that money has got to go somewhere. It's just piling into investments. It's easy credit.
Can't be held in cash, that's for sure. At 0.25%, it's not worth a donut. Look, let's just sort of explore. So, bull market. All right. So, for people watching this that don't know anything about the stock market, we call a bull market a market that's trending up, and it very clearly has been now since March 23rd, 24th on its signal. Now, in that time, people talk about the S&P 500, for example. Everyone has heard of the Dow Jones index, but it's probably not the best index to use to look at the US market because there's only 30 stocks. But the S&P covers the big 500 companies, and that now has hit a technical level which breaking 3,000 points is a huge milestone. Again, for people that don't follow markets, the nature of this conversation over a cup of tea isn't to bog you with jargon. But what that shows is that glass ceiling that we're sitting at, that resistance level of 3,000 has just been smashed with the weight of momentum. The weight of money has just pushed that market up through there over the 200-point moving average too, which is another very, very bullish signal.
You have to make hay while the sun shines. So despite what's going on with the economy and the headlines that we're seeing, which are primarily really negative, I mean, our market is going gangbusters and so are our results.
And that flow of money, I mean, you talked about fiscal and monetary policy, government policy, be it tax cuts or subsidies or government spending. That's one thing. But let's talk about one of the highlights, I suppose, for the Aussie market that we saw actually last week, which was that surge in the banks. I mean, 10% in one day that's the end of the bull market. That surge that we saw in the banks, 10% in one day is insane. And I look back over, my trading career and I'm scratching my head to find a time where I've ever seen anything like that, so broad-based across the banking sector.
Yeah, it was massive. It was massive.
Foreign buying, favourable dollar.
Did you expect that? I didn't expect it.
I didn't expect it, no, but we had trades in the bank, so we all did very well.
We were favouring the banks last week over the resources.
You had 4 positions.
So we loaded up on them. It's just a shame we had sold calls, really, because even though we had maximum profit, we left there was a bit of an opportunity cost there, which...
That's okay.
I reckon always leave something for somebody else. It makes them want to come back and play another time, doesn't it? But that money coming in, what is the case for it? I think we saw that surge in the Australian dollar, which really sort of probably reflected a weight of money coming in from offshore, which moved the needle on the Aussie. And then coming in, why the banks though? And I guess the news has been so bad. We had cuts in dividends. Which has really derailed the idea that banks are the place for your self-managed super, your long-term shareholding. You get your fully franked 4 or 5% a year. That's gone, and the price of the banks obviously came off on the back of that. We had the Royal Commission, we had the overall slowdown and sell-off in the market post-COVID. So I guess our banks now are really looking like they're just simply a growth stock. They're very profitable. they're in an oligopoly, and they're very, very lucrative, very, very profitable business that now they're not paying big dividends out. That dough is staying in to refund further growth, provision for some bad debts, I'm sure. So maybe somebody else is on the same page that's they are growth stocks and that's where we should be playing.
Absolutely. I mean, we've had a number of trades expire yesterday, so finish in max profit, giving us the ability to enter back into the same stocks this week. And we'll be no doubt looking at some banks for sure to take advantage of that headwind that's going on.
Yeah, still probably good value. Anywhere around these levels, the banks have come off a lot. I mean, they were just about the heaviest hit sector. In Australia down, what were they down? 30, 40%?
Yeah, something like that.
And that's been a meandering too with the Royal Commission. There was never that real recovery. They had the sell down, it sort of moved sideways, property market slowed down. So again, it wasn't an unexpected drop that one day you just turned on the screen and it's down 30%. It's been, the leaf falling out of the tree drifting down, which again, a lot of people that maybe aren't as familiar with markets as we are always imagine that when there's a correction, there's just, you turn your screen on one day and everything's down 30, 40%. That's not how it works. You get those early indications, again, shown in the charts to prep yourself and be ready to be out.
Yeah. So I think even at current levels, I still see banks as being reasonable value. So, there's plenty of opportunity there, I think. I mean, a lot of the resource companies are starting to push back up to the prior highs. So maybe be a bit more cautious on the resources compared with the banks.
Yeah. Well, certainly risk on if there's some trade problems too in terms of a resource sector.
Yeah.
So the old school philosophy, sell in May and go away, maybe not. And I think this year is perhaps going to prove to be an exception. It's going to be a big call for the years, gentlemen. You can hold me accountable to this, and I'm sure we'll come back and talk about it. So this year, it goes without saying, we've got massive civil unrest in the US. I know we're talking a lot about the US, but that's the dog that wags their tail to all intents and purposes.
Yeah.
There's enormous civil unrest over there, and not rightly so. Obviously, what happened with the police officer and the gentleman that's murdered is horrific. But have a protest for sure. Start looting, according to the president. That's when the shooting starts, and that's what we're starting to see over there. Enormous unrest, which is unsettling altogether. However, we are in an election year. And I think we looked at the stats the other week, and if we go back to 1928, which is marginally before both of our times, certainly yours, I think. Just. Since 1928, there have been 23 elections in the US.
Correct, yeah.
And out of those 23 elections, only 3 of the election years have we seen the stock market finish lower. So that's an incredible psychological tailwind for markets too. We've got all sorts of bad stuff going on, but it is an election year. Is that going to be enough with the stimulus, the money being thrown at it to keep this market driving higher? What do you reckon, guys?
Well, I dare say President Donald Trump, as a great a leader as he likes to think he is, he'll want to keep himself in power. So why wouldn't he make sure that the stock market turns out in a favourable manner? Would you agree, Andrew?
Possibly. I mean, the market will do what the market will do. So, we'll follow our signal screener, and if that turns red and says it's going down, we'll change our view to bearish. That's a typical technical analyst reply, isn't it?
I think that counterbalance of opinion is exactly what drives our team, because it's so easy to get caught up into the euphoria of a strong running market and be blinkered to some of the risks. And having that check and balance, particularly with such a master of technical practitionering, to say, the chart's telling me something here, and we need to see this objectively, not go with whatever our sentiment or our personal feeling is, but let's actually look and see what's in the charts is critical.
Yeah.
And I think that's really driven our success in our trading. I reckon we're going to see an up year, guys. I really do. I think we'll also see a second term president. That's going to be, you don't probably want to hear that, but that's where I think we're going to see ourselves going.
Probably tend to agree with you. And we'll make hay while the sun shines.
Maybe. I'm not so sure about that. I think the Democrats are going to get it.
Oh, well, there we go. We might have
let's put a bet on, shall we?
Well, we might have it over a beer instead of a cup of tea, and we'll explore that one a little bit more. But yeah, it's a huge factor, and that is a massive variable that's also sitting in the background against a very, very uncertain market, which again puts into context the run that we've seen. So look, putting May in the bag, it's our rear view mirror, technically speaking. It was a ripper of a month trading for our clients, some great returns, as we'll see with our traders of the month, and we've seen from our client account balances. From being in the game, people often just look at the trade. We're in the trenches day in and day out with these things, managing them, finding them, and we live and die by what we do for a living. We love it. That's why we're in early in the morning. That's why we're up late at night with various trades on the US market. And I don't know about you guys, but I try and be very unemotional when it comes to my trading. but I'm actually quite emotional when it comes to our client trading. And when I see the profits that have been banked, that just gives me a real good sort of, and I don't want this to turn into soppy Andrew, but I feel real bloody good about it when I see people that have had the courage to put their money into the market, follow a plan in the system, and bank money. They deserve it, because I think life does and should reward action takers.
And funnily enough, I heard an amazing story this morning. One of our clients, his name's Dominic, I'll leave his last name out, had a call with him this morning. He said, Mitch, I've achieved such good results. I've just ran my numbers for May and my trades. I've been able to cover my rent just from using cash flow on demand as a strategy.
Nice.
And I said,
That's
mate,
great.
that is an amazing result. You can pay for your rent without a
Good
strategy.
feedback.
Amazing feedback.
Fantastic feedback.
That's what it's all about. Keep up the good work, guys, and we'll be back next month to help our clients understand a little bit about what's going on. Good chat.
Absolutely.
Thank you,
Look forward to it.
Great stuff.